Welcome to Friday Takeaway. On the menu we have Sapura Energy and Media Chinese International, but first we look at the fact that this week the Fed raised its benchmark federal funds rate by a quarter percentage point and signalled a higher pace of increases going forward. Now the Fed expects to lift rates another 2 or 3 times this year and 3 more times next year to cool faster growth, higher inflation and lower unemployment. Facebook chief executive Mark Zuckerberg finally admitted his company failed to protect the privacy of users, many days after reports that Cambridge Analytica had harvested data from more than 50 million Facebook accounts. Now, while saying that Facebook would take steps to prevent this happening again and that they would tell users that their data had been misused, he did not express any regret for the mistake. And in Malaysia, the MCMC has imposed sanctions on 40 portal and blog sites for false news content, with Deputy Communications Minister Jalani Johari saying that any news related to 1MDB that is not being recognised by the government is considered fake news, therefore urging the public to accept the government's explanation on the matter. On to the FBM KLCI. As at 10 o'clock this morning, the index was down 0.6% to 1,865 points, but still 20 points higher than last Friday's closing. And year to date, the KLCI is up 3.8%. In this week's This or That, it's all about small caps, or should I say former mid and large caps, whose fortunes have been pummeled by challenging conditions. On one side is a former investor darling once loved for its dividend yield, attempting a digital comeback, and on the other is a former energy behemoth fallen on hard times, also attempting a return to former glories with new project wins. So let's probe a little. Which of these penny stocks should you put your coins into? Now, Media Chinese International is a Chinese language publisher in Hong Kong, Malaysia, the US, Canada and China. It owns a 73% controlling stake in Hong Kong listed One Media and a direct 7.3% associate stake in Hong Kong market-bound Most Kwai Chong, which is the subject of recent market interest. Media Chinese has been surging in Malaysia because of the upcoming Hong Kong IPO of Most Kwai Chong, which operates the online video outlet TV Most and a local satirical magazine named 100 Most. Now, the retail tranche of its IPO has been oversubscribed apparently by nearly 3,000 times, with investors buoyed by its aggressive and successful expansion of its main digital media business, which has brought strong revenues and profits. Now, while still down 35% of a 12-month period, its shares have spiked over 10% in the last fortnight as news of MKC's IPO strength emerged. Today, Media Chinese stock is down 3.9% to 38 cents. Interest in Media Chinese came from the arbitrage opportunity between the share prices of Media Chinese and the Hong Kong listed One Media. But analysts pointed out that this was at best a fleeting chance which could diminish rapidly if trading sentiment changes, which we saw yesterday. Now, Kenanga has downgraded Media Chinese to underperform with an unchanged target price at 35 cents, based on a targeted and estimated 2019 price earnings ratio of 11.4 times. Sapura Energy Berhad is 17% owned by Tan Sri Dato Sri Syahril Samsudin, and they are an integrated oil and gas services company with a global presence in over 20 countries. Sapura Energy this week announced winning an EPCIC contract off Sarawak from the Mubadala Group, estimated to be worth up to $500 million over 3.5 years. Now, this is Sapura Energy's most significant fab job in some time. After hitting a recent low of 40 cents, Sapura Energy's stock has rebounded thanks to this and expectations of other contract wins from Mubadala, as well as the upcoming listing of its energy arm, which might raise nearly 2 billion ringgit to prepaid debt, although they're still down a gargantuan 71% over a 12-month period. The downside risks include a slower than expected drilling recovery rate and of course the possibility of oil prices faltering because of US shale oil output, therefore hurting Sapura's energy IPO valuation. CGS CIMB maintained their ad call on the company but on a lower sum of parts target price of 80 cents for 1 ringgit 42 in light of weak drilling charter rates.